And so that means you can expect it to keep going up. I think it's going to surge through the roof, and then it's going to surge to 180 and crash to 140, and people will be freaking out about it again. I'm staring at my screen, and we're selling dollar bills for $3, sometimes a million times a minute.
In this video, I'm going to be reacting to Michael Saylor joining the Squawk Box on CNBC. I like the Squawk Box, I like the guys in the Squawk Box, and I love the banter they have with their guests. Oftentimes, both people are very positive to Bitcoin and anti-Bitcoin. But in this case, we have a very positive person to Bitcoin today, obviously, Michael Saylor. And I think this is going to be a really important series of interviews and clips to dissect. And the reason why is very simple. We are at a very specific and particular point in Bitcoin's history. That point is in the store of value point in Bitcoin's history. There are so many more important people and companies and other innovations coming down the line. But where we are right now in this point in Bitcoin's history, the single most critical need for Bitcoin is to gain monetary premium. And there is almost nobody, if anybody, on the planet alive today that is accelerating Bitcoin's monetary premium. There's no one else more than Michael Saylor that's accelerating that monetary premium. And so I think the words that he says here are very important, not just for MicroStrategy stock shareholders, not just for the Michael Saylor moon boys and fanboys, but if you have Bitcoin, I think it's really important to understand the nuances of what Michael is talking about, because it's going to better help you understand the ways at which traditional finance and the market in general are beginning to think about the ways that Bitcoin is monetized. And I've been very fortunate to share multiple private conversations with Michael, dinners and conferences and other kinds of things. And, the way this guy thinks, he is 10 years ahead of every other Bitcoiner, and every Bitcoiner is already 10 years ahead of everyone else. So without further ado, let's get to the first clip here, the earliest clip of all these, when Bitcoin was just in the $50,000 range. It sounds so cheap today, but wish we bought more, but oh well. So let's hear this clip and break down some components of it.
Joining us, Michael Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage, because there's been a lot of major swings in the past, and there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy has bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P is up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Boom. What a great answer. This is a very common concern. And if anything, the largest concern, right? People are concerned to buy MicroStrategy stock because they're terrified what happens if all this debt gets unwind. What if Michael gets margin called, right? And people that just own Bitcoin that are neutral on Michael and his company, it's a general concern among people in Bitcoin alone. Is that, dang, Michael Saylor, MicroStrategy, about 2% of the total Bitcoin supply now. Surely this is a bubble. Surely this is sustainable. But what a lot of people don't understand, I actually had this conversation literally earlier tonight with a very smart friend of mine who didn't understand. Like, he's a Bitcoiner, but he didn't understand that that many of the loans, many of the bonds are not secured. It's unsecured debt, right? It's like, which is kind of the crazy thing, that investors are willing to give Michael a bunch of money to buy Bitcoin on their behalf, and they're willing to take as little as 0% interest on those loans. And these loans, a very large percentage of them are unsecured, right? And so that negates a massive component of the risk. And something else I think is funny here is when Michael comments on the Silicon Valley Bank loan. And actually, a lot of people don't know this, but they made literally hundreds of millions of dollars as a result of that loan being called to them, right? Just because the way that the market worked and the way that whole thing unwound. So ironically, they made money from that loan collapsing a bit earlier due to no fault of their own, right? So there are risks with having leverage, there are risks with having that. But if you do leverage smart and you do leverage consistently with a consistent plan, and you're mitigating your risks when it comes to your Bitcoin custody setup, you really aren't taking nearly as much risk as some people I think would have you believe. Now, of course, that is highly dependent on your current business or your current financial structure, and that is highly dependent on your time horizon, right? Basically, what you're doing is you're going short US dollars to go long on Bitcoin. And if you're somebody like Michael Saylor, who via his company MicroStrategy wasn't just buying in the quarters that were high, wasn't just buying in the quarters that were low, but bought every quarter consistently in small chunks, they've turned out to be just fine. Even with very large buys today, over $100,000, they're still doing just fine, and they have consistently outperformed, like Michael said, the entire S&P index. Now over, the last 4 years, they have outperformed the entire stock market.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Yeah, I think that's really important that a lot of people need to understand here is that MicroStrategy stock is probably going to continue being more volatile than Bitcoin to the upside and the downside. Okay, it's not going to be a straight line up. It's not going to be a consistent lineup, because what Michael has made very clear here now for years is that he's not selling outperformance against Bitcoin. He's selling volatility, and people want that volatility both on the upside and the downside. And so that's really important to keep in mind here, that it's very likely, in my opinion, that MicroStrategy could significantly underperform Bitcoin in a bear market. That's not guaranteed. Of course, there's a range of possibilities. It's hard to know what new kinds of securities or products MicroStrategy is going to offer. It's impossible to know what Bitcoin is going to do. So therefore, it's even more impossible to know what a derivative of a derivative is going to do, right? And so my point is that this is really important to keep in mind, is that MicroStrategy thrives on volatility up and down. MicroStrategy thrives on having at the money, executed and, crashing the price of the stock, right? Michael has done that repeatedly, right? And likewise, MicroStrategy thrives when a bunch of shorts get wrecked and there's a massive spike upwards. So it's really important to keep in mind. This is a very volatile thing, and that is part of the whole process. He's selling convertible notes, convertible bonds that produce that volatility for investors. And on the other end of the barbell, you're able to have this highly volatile end of the spectrum. And so that's really what you're doing if you're buying the equity of the stock, because, of course, nobody watching this video is buying the convertible bonds. That's not your demographic, right? If you're involved at all in the company, you're buying the shares, right? But that's really important to keep in mind, that you are taking the brunt of the volatility that Michael is obsoleting out of the convertible bonds he's selling to the traditional investors. And both of those things are fine as long as you know what you're getting and what you're buying.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting 1-for-1 performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent,
right,
buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made right now? I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing, and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, And that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this though?
Yeah, okay. So before that conversation pivots there, just to comment on that real quick about what he was saying with convertible bonds again, that I think that's pretty important to note, right? Is that these are kinds of financial instruments that most of us everyday people are not able to participate in. And that is a massive market, because most of us everyday retail people can't participate in that. I think we forget just how absurdly large this market is, right? The debt market is what runs the world. The debt market is what is currently being penetrated by MicroStrategy. Okay. Bitcoin is entering the bond market. Bitcoin is entering the fixed income market as a function of MicroStrategy, right? Bitcoin is the asset you as a retail person should definitely focus on. Focus on Bitcoin. Focus on Bitcoin self-custody. MicroStrategy is cool. Other Bitcoin stocks are cool, right? That's all great. But really, I highly encourage you to focus on Bitcoin. I'm somebody that owns MicroStrategy. I'm somebody that bought MicroStrategy, relatively cheap. I mean, depending on what your definition of cheap is. For me, it was pretty cheap. But as a MicroStrategy shareholder, I highly encourage you, focus on Bitcoin, focus on stacking Bitcoin, getting your Bitcoin stacking goals. But you have to understand the whole reason this MicroStrategy playbook works is because of Bitcoin. Bitcoin is what you price MicroStrategy in. You don't price Bitcoin in terms of MicroStrategy, right? So Bitcoin is the money, MicroStrategy is a security, and when you're buying that security, you're buying a security that produces securities for others, that produces debt instruments for others. And I am very bullish on that. There are hundreds of trillions of dollars sitting in these bond markets, sitting in these fixed income markets that can't buy an equity, and they can't buy the underlying Bitcoin commodity. And so this is the closest they can get to Bitcoin. And that's why I think this whole discussion here is really important for you to understand, is that we have not seen this in previous Bitcoin cycles. We have not seen the floodgates from this entire multi-centillion-trillion-dollar market being able to have the possibility of entering into Bitcoin. It's a massive, massive market. 1% is $3 trillion. Okay. Michael Saylor has described his $42 billion 3-year plan, right? That is barely, what is that? 1% of 1% of the global fixed income bond market. Okay. That is how early you are to Bitcoin. And that $42 billion is going to alone force the Bitcoin price up significantly. And so even if we just get to 1% of global fixed income demanding some sort of Bitcoin-backed note, Bitcoin principal protected note, or convertible bond or whatever, right? Even if we get just to 1% in the course of the next 5 or 10 years or so, as the result of these exact kinds of securities that Michael is offering, that is a Bitcoin price significantly higher today. You do not have to feel like you should chase MicroStrategy stock to stack more Bitcoin. You can do that a little bit if that's something that you want to speculate in, but I strongly encourage you, don't focus on that. Focus on Bitcoin, focus on stacking Bitcoin. You are not too late to stacking Bitcoin. MicroStrategy is cool, it's sexy, it goes up against Bitcoin, it goes down against Bitcoin, it's super volatile. But don't be chasing volatility, be chasing the lowest risk pristine collateral. That is not MicroStrategy, that is Bitcoin.
One of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Spend quality time with quality people in one of the most beautiful places in all of America. You can do this at Bitcoin Zion 2025, a Bitcoin-only networking retreat and experience. It's 3 days, Thursday, May 29th until Sunday, June 1st, 2025, immediately after the Bitcoin conference in Las Vegas. There'll be speakers there, everyday plebs, Bitcoin people you would recognize, and we're all going to be there enjoying time with each other, being outside, and getting time to relax and really connect with other people. All kinds of conferences in Bitcoin are wonderful, but this kind of event is very unique and specific because you get so much time
with Bitcoin speakers and with other people in Bitcoin. You get to build actual friendships and relationships and experience memories hopefully you'll carry with you for the rest of your life. Lots of speakers have already been announced. More speakers and surprises are coming down the line. But whatever the case, the whole point of this event is not to rush with event after event, but to slow down and take time to not just get to know another person, but get to know them as a person themselves and as a friend, not just as someone on a big stage. We will be talking about Bitcoin. We will be relaxing. We will be vacationing, and we will see some of the most beautiful hikes in the entire country. We have a luxury stay with some of the best lodging in the country, ranked some of the best lodges in the world, and lots of quality food as well. Private chef and everything of the works. Bitcoin workshops, there will be tutorials, Bitcoin workshops for beginners, advanced corporate treasury strategy, Bitcoin self-custody, multi-sig, all that wonderful stuff. Your logistics are covered. You'll get 3 meals a day. There'll be private chefs and catering. The resort is covered. Your transportation from Las Vegas is covered. Everything is covered, and you will have unique activities. We have an orange Cybertruck coming, a hot tub, games, pools, movie nights, and lots of fun outdoor activities with your Bitcoin friends. Join us if you're a business person looking to expand your business, if you're an entrepreneur trying to get new ideas from others. You can join us for pleasure. Bring your wife, bring your kids, bring your family, bring your husband, bring people in your life, and you get to enjoy the beautiful outdoors with them. Or you can join for a mission. If you have a church or you have a nonprofit organization, bring your loved ones, bring your friends, and help them better understand Bitcoin. Tickets are limited because this event is obviously way less than 1% the size of Bitcoin Vegas, so tickets will go fast. Please reserve your spot now. You can do it at lukebtc.com, my website. If you join my Retire on Bitcoin community, you will get a significant discount on your ticket, as that is one of the many perks that they get in the Retire on Bitcoin community. Text the phone number on the screen, Bitcoin Zion 2025, along with your email, name, and guest account, and we will get you sorted out as quickly as possible, because ticket prices will be rising upwards and live as, of course, we approach capacity. There are going to be less and less spots available. So please reach out as soon as possible. Get your spot. We would love to have you. We would love to get to know you. We would love to enjoy 3 days together immediately after one of the biggest events in all of Bitcoin. Reach out. I'll be there, and I'll be more than happy to get you set up so that you can come to this event as well. More than anything, get outside, spend time with people in Bitcoin that you care about, and build new friendships.
Yeah, so that word capital keeps coming up, and I want to mention why Michael keeps using that word capital, not currency. The reason it's very important is that Bitcoin has had a branding of currency for a decade and a half now, right? Cryptocurrency. And what Michael's big focus here is transitioning the Overton window from the currency side of things to the capital side of things. When Michael invited me to dinner, this is one of, if not the main thing he really wanted to hammer home to me and everyone else there, was that we should be describing Bitcoin as capital, in his opinion. And to explain the reason why is that he wants Bitcoin to win. As he has described it himself, he doesn't want to become a martyr. He doesn't want to get arrested. He doesn't want to be confrontational with the government, right? And the way to do that is capital, right? If you are the government agency, you want to be hearing from given investors, legalize and integrate our form of capital, or our digital commodity, into the financial system, right? Because the government hears that and they hear, ooh, dollar signs. That's what they hear. If you're a government, you want higher tax receipts. You want more taxable income, right? What's the best way to do that? Legalize these commodities, legalize this capital, legalize it, and then you can take some tax whenever there is some sort of capital gain on the asset. You can bring in the industry, you can regulate it, right? As the government, you benefit from the country having a larger economy. And by integrating digital capital into that, you can have that. Now, if you then approach that government person and you say, this is a currency, they hear that as competition. Because most of these politicians are not thinking like a technologist. Most of these politicians are not thinking like a visionary or thinking like an engineer. They're thinking like a politician, like a lobbyist, like a regulator. And so if you approach them saying this is a currency, what you do is you scare them away and you force them into thinking this is a zero-sum game. I believe Bitcoin is a currency. I believe it is also capital. However, I agree with Michael Saylor's tactics here. I agree with his strategy here. Bitcoiners' main focus right now should be to focus on Bitcoin as digital capital. Why is that? A digital commodity. Why is that? Because this is the era in Bitcoin's history that we're currently in. it is not yet economically viable to have Bitcoin as a medium of exchange yet, globally mass adopted. That's just not viable yet. Why not? Because Bitcoin is not economically profitable yet. It doesn't have enough monetary premium yet to justify entrepreneurs, innovators, and visionaries building new technological solutions to make the medium of exchange component of Bitcoin more important, right? Medium of exchange is critical for Bitcoin, and it will inevitably become a medium of exchange, assuming the store of value narrative continues to survive. However, you need the thing to have value first before you can use it as a form of exchange. And so at this point in Bitcoin's history, it is really critical that we don't make the regulators mad. It's really important we don't scare them away. We want to infiltrate the government. We want to infiltrate companies. We want to infiltrate the bond market. And the way to do that is to have a consistent, targeted narrative that this is a commodity. This is a commodity. This is not yet a currency. This is not yet used every day by everyone. In the future, it will be. Maybe you want to call it cryptocurrency if you want to do that. But the better definition, the better tactical narrative, both for the regulators and for the people doing that, and probably for the people in your life that you're trying to orange pill, is that this is a commodity, capital. Because that's going to make a lot more sense. If you're trying to orange pill that person in your life, that partner, that parent, that kid, that coworker, that person from church or down the street, your neighbor, right? Whomever it is in your life that you're thinking of right now, I know you are. If you're explaining this as a form of commodity, like, again, the metaphor of digital gold, which was mentioned a little bit earlier in this interview, that's probably going to be received a bit better from that person that you're trying to help understand Bitcoin. Even though Bitcoin is a currency, even though it will be used as a currency someday in a very long-term future, it's going to make less sense to them if you describe it as a currency. Because when they look at Bitcoin, all they see is number go up. They don't see merchant adoption in developing countries. They don't see the currency side or the medium of exchange side. They only see the capital side. So that's my encouragement to you. In the same way Michael described that to me, numerous times, in person, but then also even more times here digitally to the public. I'm just explaining here. This is why Michael uses this language very carefully. You'll never see Michael describe it as a currency, or at least you very rarely will see Michael ever describe Bitcoin as a currency. He focuses on describing it as capital, digital capital. It's a digital commodity. That's what he describes it as. And I hopefully have explained well enough the reasoning as to why he explains in that sense. And so now let's transition a little bit to a different interview. That interview we just finished there was when Bitcoin was $55,000 or so. Now let's skip forward a few months into an interview later down the line. He's still wearing the orange tie, but now the Bitcoin price is even higher. It's another 40 or 50% higher than this first interview. Back on CNBC.
Joining us now in an exclusive interview is Michael Saylor, co-founder and executive chairman at MicroStrategy. He is joining us from the Cantor Crypto, Digital Assets, and AI Infrastructure Conference in Miami. Michael, it's great to have you on the show.
Yeah, thanks for hosting me, Morgan.
So I'm going to start right there. The torrid run we've seen in Bitcoin, is this all just anticipation about what a Trump administration is going to mean for it?
The red wave is probably the biggest thing that's happened in the past 4 years for Bitcoin. It's incredibly auspicious for Bitcoin and for the entire crypto industry. But we're also getting a lot of very constructive support from Wall Street. BlackRock has been a very, very strong voice articulating the Bitcoin value proposition. And of course, MicroStrategy on October 30th announced that we were going to raise $42 billion to buy Bitcoin. And that's the same as saying we're going to buy every Bitcoin mine for the next 3 years at $85,000 or more Bitcoin. So there's a lot of bullish things going on in the market right now.
Yeah, definitely. I fully agree. Those are the two largest catalysts at that period of time when this interview came out, was that Michael Saylor, via his company MicroStrategy, announced a $42 billion purchasing plan for Bitcoin. And the signal in the noise there is that that's not going to stop. At some point in the next 3 years, they're probably going to raise that target. And so, they're going to probably be buying at least that much. They'd be pretty confident. Otherwise, they wouldn't have announced it. And of course, since then, they have surpassed all expectations and gone through a massive percentage of the 21 billion, at the money, really, really quickly here, right? In convertible notes, right? They've been going at a much faster pace than even what they claimed just in October alone, right? They've been accelerating at a faster rate already, even though we have 2.5 more years to go, right? We have a long way to go, and yet they're still smashing expectations. And I fully agree with them as well on the red wave, right? I don't want to get political. I'm not trying to, criticize anyone's political beliefs or anything, but just to state, my opinion here is that yes, the red wave was incredibly important for Bitcoin. Not because Donald Trump is the savior of Bitcoin. In the same way Michael Saylor is not the savior of the Bitcoin, in the same way that Luke Broyles isn't the savior of Bitcoin, Donald Trump is not the savior of Bitcoin. He might be orange, and that's a pretty funny meme. Orange man, orange coin. But Donald Trump is someone that really wants to see his branding survive. That's his incentive. Whether you love him and you think he's a brilliant, genius businessman, or you hate him and you think he's this horrible person, doesn't matter. What you all agree on, where the Venn diagram fully aligns, is that you all agree he's into branding. His whole thing is he wants to be known as the best president ever. Huge, right? And so what does Donald Trump want? He wants Bitcoin price to be huge. Going to build a big, beautiful price, a big, beautiful green wall where the price will go up to the moon. That's what he wants. He wants his branding, right? He wants to be remembered as the best president. You know, that's what he wants. And so I think it's really important to say all this, because I think that just for whatever reason, you know, the fate of the universe and the way this is all aligned, Donald Trump might be the perfect person to embrace Bitcoin in the United States, because he is bombastic enough, he is out there enough, he is independent enough, and he is bold enough, for better or for worse, that he might just do it. He might just pull the trigger and smash by the Bitcoin, because it's controversial enough, but he's used to controversy. He loves the controversy. He dwells in it. He bathes in it. He loves it, right? And so I think that's really exciting for Bitcoin. I think that's really cool. And I want to see America buy Bitcoin. This is something a lot of people in Bitcoin are really unsure what to think about. But my personal opinion is that I want to see America buy Bitcoin. Yes, there may be trade-offs with that, right? Maybe there is a risk that America buying Bitcoin could exert some sort of indirect force on Bitcoin holders or convince them, right? Like, there are risks. Every time you bring in a new voice, a new perspective, a new holder into Bitcoin, like, yeah, maybe they could have some sort of detrimental effect on the culture or methodology or information surrounding Bitcoin. That's entirely true. Even if they can't directly destroy the network, maybe they can indirectly hinder its progress for a while. However, the United States of America is the biggest war machine in the history of mankind. There is more explosive power, there is more kinetic force behind the American government than any other nation state in the history of man. This is both the most awesome and the most terrifying institution that we have ever created. And it is the single biggest risk, because the way America falls or rises is how China and Iran and the Saudis and Russia and everyone else is going to rise or fall. America has done horrible, evil things at toppling governments and indirectly and sometimes directly allowing hundreds of thousands, in a couple cases millions of people, to die what I believe would have been entirely preventable deaths. And likewise, America also has done wonderful things. America has protected global peace. That is true. America has stopped countries invading other countries and killing civilians, right? I would argue America is a massive net good. I'm an American, so that is my bias. But my point in all this is saying that America is a fiat institution that survives as a function of a fiat premium. And I would like to see America have a greater premium in a Bitcoin standard than in a fiat standard, right? In the same way that Bitcoin not only saved and prevented MicroStrategy from collapsing down to zero, not only did it prevent that, it actually enabled MicroStrategy to grow in a more healthy, a more sustainable, a more stable, and a more repeatable system with aligned incentives for everyone, shareholders, CEO, everyone else, right? And likewise, I would like to see the same thing for America. I would like to see America infiltrated by the Orange Party, the Bitcoin Party, and all of a sudden we see America not only just have its collapse prevented, thanks to Bitcoin, but we begin to see a slow transformation over the course of the next couple decades where things get better and better and better. Because if we fail to do that, if we instead say, we don't want to have America buy Bitcoin, we don't want to have the American government buy Bitcoin, you know, they can have fun staying poor, you know, get the price they deserve, they should hyperinflate, you know, they don't deserve it. It's like, I understand your anger, I understand why you say that, but the reality is that if we don't do that, like, they are going to want to buy Bitcoin one way or the other. The American government is going to want to buy Bitcoin on the way the other. So which way do you want? Do you want a slow, relatively peaceful transition where they begin allocating now or over the course of the coming years? Or do you want to see a world where they procrastinate this, they actively don't buy Bitcoin, they aren't Trojan horsed into allocating to Bitcoin, and then all of a sudden 5 years, 8 years, 10 years, 20 years from today, they panic, they realize they made a massive mistake, and because their time preference is so short at that point that they're on the verge of complete economic and fiat collapse, yet they use some sort of force to confiscate people's, come after people, right? It's like, I would rather see the transition. I would rather see the Trojan horse than the violent revolution. And so, anyway, all it says, I fully agree with Michael's point. I think those were the two big catalysts: the $42 billion Trojan horse that is going to infiltrate $21 billion to the stock market, $21 billion to the bond market, and of course the red wave. The red wave that is ingesting orange-pilled people, or relatively orange-pilled people, into the major branches of government, not just the federal level, but also the state level as well. The election, the red wave of 2024, was not just a big deal because of Trump. It was a big deal because of the cultural statement that was made. I think that's actually the largest deal, as well as also, of course, the red wave at the state level, in the Senate and the House and everything else, governors as well. So that's just my opinions with that. I think that's why it's a big deal. Those were three massive markets. The political side, which was the biggest one, the stock market and the bond market, those were three massive events where those three independent Trojan horses went into those markets, and it will take years for them to successfully overtake those groups and bring them into the orange embrace. But that's why I think that those were a really big deal.
And I do want to get to that audacious $42 billion fundraising plan of yours. But first, there's a lot of regulation and regulatory aspects that are in focus with the Trump administration coming into play. SEC chairman, for example, a lot of expectations that Gary Gensler is going to step aside. And I realize Bitcoin itself is governed as a commodity, unlike other cryptocurrencies. But when you're talking about the ETFs, and when you're talking about the cryptocurrency exchanges, and when you're talking about companies like yours, MicroStrategy, which is publicly traded, it is SEC. So how important is that appointment going to be? And who would you like to see at the helm?
Well, I think whoever chairs the SEC has probably the most pivotal role in the entire digital assets industry. I think this is incredibly bullish for digital assets. It's very good for the crypto industry. We're going to see a lot more pro-Bitcoin policies. We're going to see a digital assets framework. We're going to see an end to the war on crypto. We're going to see a lot of pro-business policies. And I think that clearly the SEC will be a big part of it. So it's above my pay grade to have an opinion on who it's going to be. But I think it's pretty clear the House, the Senate, the White House, they're all very pro-crypto. So I expect that we'll have a very supportive head of the SEC.
As a side note, I always find it super funny when Michael says that's above my pay grade. I've heard him say that many times in interviews. I've heard, he's said that to me when I've asked him some questions before. It's always funny to me, because I think I did the math earlier today. I think his company, about like $488 million of Bitcoin every single day for like the last month and a half straight. It's something crazy like that. So anyway, Really, what he's saying is that it can't be predicted, because obviously, basically nobody obsesses about Bitcoin more than him. It can't be predicted, and we'll see if these SEC choices end up being the right ones for Bitcoin. But anyway, I always find that funny when he says that.
Well, as well as you've done buying Bitcoin, I'm not sure anything is really above your pay grade at this point, which leads you to the question, what do you think is the biggest threat to Bitcoin's price staying above 60K? What potentially causes another dive below 30K?
Yeah, I don't think it's going to 60K. It's not going to 30K. I think it's going to go up from here. I'm planning the 100K party. And I'm thinking it's probably going to be New Year's Eve at my house. So I would be surprised if we don't go through 100K in November or December.
So then what's the biggest threat to it going lower, even if it doesn't get that low?
I think the biggest uncertainty in the industry was November 5th. And would you have a blue wave? Would you have a red wave? Or would you have a split Congress? And would you have any dispute about the future of crypto assets and Bitcoin? I think that was settled by the people very decidedly on November 5th. And I don't really see any threats in the near-term horizon.
Yeah, good answer. Very funny. It's one of the reasons why I like reacting to these a little after they've been posted, because we can see very clearly in hindsight just how funny it is, right? The host asking, are we going to see 30K again? No, we're not going to see 30K again. Sorry, buddy. At the time of this recording we're reacting to here, Bitcoin was $88,000 or so. Now, of course, even that sounds cheap. But then, 60K, even 30K sounded really, really cheap. And I still have this question today. And so this is my encouragement here. It is human nature to feel like we got to get an edge. We got to get ahead, right? Like, let's say Bitcoin's $100,000. Ooh. I'll buy it 80K. In this video, Bitcoin is 88K. Oh. I gotta buy it 60K. And guess what? When Max Kaiser was buying Bitcoin at 30 cents, he was annoyed that Trace Mayer was buying it at 10 cents. Yes, really. Yes, I know. I bet you wish you were buying Bitcoin at 30 cents. I definitely was not buying Bitcoin at 30 cents, right? My friend Lawrence Lepard, Larry Lepard, many of you know, right? He was annoyed when he bought Bitcoin at $300, right? I know a few of the Silk Road guys, they were annoyed when they were buying Bitcoin at $3 because it used to be $1, right? Jimmy Song, when he was buying Bitcoin at $70, he was annoyed because other people bought it at $30, right? People like American HODL and BitPain and others were annoyed when they were buying Bitcoin in $3 to $4 grand when other people were buying it at $500, right? Michael Saylor himself, who of course is the subject of this video here, Michael Saylor was annoyed that he didn't buy Bitcoin at $900 when he first tweeted about it in 2013, and that he only started buying Bitcoin via his company MicroStrategy at $11,000, right? So it doesn't matter if you're Max Kaiser, you're Michael Saylor, or you're anyone else in between that I mentioned. You are you, and this is your life story, and it is human emotion. Everybody has gone through that. I've gone through that too, right? Granted, thank God, I got over that really quickly, and my strong encouragement for you is to get over that really quickly. Your bias, your emotion, seems like the grass is always greener on the other side. You want that little bit of a market edge. You want that little dopamine hit of getting a Bitcoin price just a couple percent, just a couple percent, just a couple percent cheaper. I'll just wait for a dip. Give me the dip. It's like an addiction. You want the dip that never comes. Bitcoin forever has a higher probability of not dipping in any particular moment than of dipping. I'm one of the biggest advocates out there reminding everyone that Bitcoin is going to crash. It is going to crash again, probably 20%, 40%, 60%, maybe even 80% again someday. Maybe not, but very likely, right? And so Bitcoin will crash, but any given day, the odds are higher that Bitcoin's going to go up versus down. After all, Bitcoin has, about a 50% compound annual growth rate, right? And so, of course, obviously, being in the market is far more important than being out of the market. And so this is my big encouragement, is that just like that we laugh at this interview clip today of where Bitcoin is 88 grand, where very quickly within a month and a half after this interview skyrocketed to $105,000, right? It's like, no, 60K is not coming back. No, 30K is not coming back, right? Michael Saylor's prediction here kind of came true. And this is my encouragement for you. I don't care if you're watching this video in 2024, in 2025, in 2028. Maybe you're watching this video far in the future in 2033. But whatever the case, whatever the price is when you're watching this, at whatever point in time you're watching this in my future, I highly encourage you, don't be waiting on the sidelines because it's always going to feel expensive. It feels expensive at $100,000. It felt expensive at $100. It's going to feel expensive at $100 million as well. But guess what? It will be cheap when it's $100 million. I know that sounds crazy, but it will be cheap when it's $100 million. It was cheap when it was $100, and it was cheap when it was 10 cents. So don't wait on the sidelines. Your advantage right now, where you should get that dopamine hit, that's the real thing you're actually craving. That dopamine hit that you can get right now is in locking in your Bitcoin profits right now and taking advantage of the thing that is on your side, time. You don't know what the market's going to do. You don't know if it's going to go up or down. You do not have an advantage there. And if you think that's the case, you are almost certainly delusional. And if you say I'm wrong, you have to be absolutely certain, right? But if you're not sure if you're being delusional or not, you're being delusional. You don't know what the market's going to do. You don't have an advantage. Your advantage is that you have time. And the other 98% of the world that's not buying Bitcoin right now, they will have many less years than you to be buying Bitcoin. Your biggest advantage right now in Bitcoin is not that you're buying Bitcoin at cheaper prices. Your biggest advantage in Bitcoin is that you have time to buy Bitcoin at cheaper prices. It doesn't matter Bitcoin price is cheap if you only have 5 minutes to capitalize on it. What matters for you is that you have literally years to be buying Bitcoin at a price a tenth of what your friends and everyone else in the world is going to be buying it in a few years, right? That's your advantage. So don't be deluding yourself into thinking that you should be waiting on the sidelines, waiting for 30K or 60K or 88K or 100K. Don't be waiting for a little cute 5% dip. It's not going to matter. Does it matter if you bought Bitcoin at $1.40 versus $1.22? No, it doesn't matter. Does it matter if you bought Bitcoin at $108,000 versus $92,000 when Bitcoin is eventually $800,000, let alone $5 million? No, it doesn't matter. So get over your emotion. and stop asking these questions. And I'm not making fun of the reporter that asks these questions. The reporter's doing his job. But the fact is he is asking this question because his job is ask the question that everybody has. And unfortunately, that's the question everybody has. Is it going to dip? Can I get a little dip? That's the question everyone has, and it's not the question that should be asked. And so I think that's a sign of really where people's minds are. That is your advantage. If you internalize this and you accept this right now, that you shouldn't be timing the market, but that you should just be allocating consistently over time, just like Michael Saylor does. He doesn't wait for dips, right? If you can have that mindset, that is your advantage. Because unlike everyone else that's waiting for a dip, you're taking action and you're maximizing the time you have, because tomorrow is not guaranteed. And likewise, Bitcoin being in this price level tomorrow is not guaranteed. There may just come a day where it is not for sale.
A strategic Bitcoin reserve, how likely is it that that is actually established? And why would that be a good thing when you're talking about a decentralized asset now being stockpiled by a centralized government?
Well, that's being sponsored by Senator Lummis from Wyoming, and she understands the value of the frontier. The United States was built by purchasing Manhattan, then we purchased the Louisiana Territory, then we purchased California and acquired Texas, and then we bought Alaska. The next great frontier is cyberspace, and the obvious thing to do is to own cyberspace, buy the future. And so I think it's a great idea. I think it will happen. And I think it's important to the United States because it cements the United States' control over the future world reserve capital network. Senator Lummis's bill will offset $16 trillion of our debt, according to my models right now. So I think it's economically wise, it's technically wise. And again, Bitcoin is manifest destiny for the United States.
Bitcoin is manifest destiny for the United States. I like the way he concluded that there. I think that is actually a really good question. I think that reporter had. I think that's a really good one. How is it that a centralized government adopting Bitcoin is good for a decentralized network? Well, here's the reality. Every market participant is a centralized network. You watching this, if you hold your own Bitcoin keys, you are a centralized point, right? You have your Bitcoin key in your house somewhere. If somebody breaks into your house and steals your Bitcoin because they point a gun at your kid, you are a centralized point of failure. This is why, by the way, you probably really need multi-sig, right? Because this is a really big threat that you must mitigate, if at all possible, which for many of you, it is definitely possible, right? So everyone is a centralized holder of a certain amount of Bitcoin. The United States of America might become a centralized holder of 1 million Bitcoin in the same way that you're a centralized holder of 8.2 Bitcoin, right? In the same way that, someone else watching this a couple years in the future is going to be a centralized holder of 0.33 Bitcoin, right? In the same way that someone after them is going to be the centralized holder of 0.05 Bitcoin or whatever, right? Now, my point is that, this idea that we cross some line where we go from a decentralized holder to a decentralized holder just actually isn't true. The only question is size, right? The U.S. government is a centralized holder 100,000 or 10 million times larger than you, 100 times larger than Saylor, but likewise, you're larger than many others, right? Michael Saylor has a net worth of roughly 50,000 Bitcoin or so. Let's say you have a net worth of 5 Bitcoin. That is a multiple of 10,000. Michael Saylor is 10,000 times more Bitcoin than you. However, in the future, most people are going to have less than a 10,000th the number of Bitcoins that you are going to have, right? If you have a mere stack of 5 Bitcoin, which is a lot of money, don't get me wrong, that's $500,000, over $500,000 now, right? But I know for a lot of you, dozens of you, maybe even a couple hundred of you watching, I know you have a net worth at least that, right? My point is this, is that you are closer in net worth to Michael Saylor than you're closer in net worth to the average person in the future. You are a centralized holder. You are a target. And this is why you have to take your tax scenario seriously. You have to take your custody scenario seriously. You have to manage UTXOs seriously. You have more in common with MicroStrategy than you do with the average person's life savings. Your Bitcoin stack, your little meager Bitcoin stack, meager tiny Bitcoin stack where you could have stacked more Bitcoin, that little stack of 2 Bitcoin, 8 Bitcoin, or 12 Bitcoin is basically going to be its own version of some sort of MicroStrategy in the long-term future. You are your own Michael Saylor. You have more in common with the mega corporation and the mega billionaire, which is Michael, than you with the average person. My point in all this is that you yourself are a centralized holder. In the same way the U.S. government is a centralized holder, in the same way that the ETFs and MicroStrategy, you are a centralized holder, right? You can criticize BlackRock and MicroStrategy, the U.S. government, holding Bitcoin on the behalf of other people, but what do you think is going to happen with your Bitcoin? If you have a couple Bitcoin in the long-term future, 99% of the world's population will never be able to afford UTXOs. Most of the world will never be able to afford actual unspent transaction outputs at the base layer for Bitcoin. You are the person. Your Bitcoin is the asset that is going to facilitate the kinds of transactions and medium of exchange components for literally hundreds, if not thousands, if not tens of thousands or hundreds of thousands of people in the far future. I know that may not seem real, but that is the case. If you believe that Bitcoin is going to be this progressive series of adoption, that is what's going to happen. You are so early to Bitcoin. You yourself, at some point, are going to become some sort of de facto Bitcoin bank. Some side chain, higher chain, whatever chain is going to be integrating other people on. All the people that can't afford UTXOs will be relying on you. And so maybe you want to critique the American government. Maybe you want to critique Michael Saylor for being a centralized holder of Bitcoin, blah, 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 whatever. But the reality is that you also have to look in the mirror. You yourself are also a centralized holder of Bitcoin on the behalf of other people, except you're a couple decades too early because you don't have quite as much Bitcoin as those people do, right? So I think that's the really important thing to mention here. And that it doesn't matter. It doesn't matter if the US government is corrupt or not. It doesn't matter if you're corrupt or not, right? Neither agent, neither holder of keys can manipulate the network, right? Maybe you can shift the culture and the narrative around Bitcoin, right? Obviously, Michael Saylor, has the same direct impact on the network as me or you and everyone else. Obviously, he has a much larger indirect impact on the network due to his mega personality and perseverance at being an advocate for Bitcoin consistently over the course of many years. But at the end of the day, nobody can shut down Bitcoin, not even Satoshi Nakamoto if he returned. So this is my point here, is that it is a very good question. Does a centralized holder of keys negate the whole purpose of Bitcoin in the first place? Well, no, actually, you have to have, if you're going to have decentralization, you have to have a wide variety of different kinds of centralized holders of keys. And as a final point, you need Bitcoin as money for enemies. If Bitcoin is only money for friends, Bitcoin has failed as an experiment and it is trending to zero. Bitcoin needs to be money for enemies because that is the only way to have a neutral platform that is going to go up forever in purchasing power, right? The internet is a communication platform and tool for enemies. Electricity is an discovery and invention for enemies, right? Writing, language, right? All of these things are universally accepted by everyone. If you're going to play a game of chess with an opponent, you need to make sure that the chessboard is built properly for enemies, for opponents, for competitors. And likewise with Bitcoin, you may not like the fact the United States government is going to be buying Bitcoin. You may not like the fact that Russia is going to be buying Bitcoin. I don't like the fact that North Korea is probably going to be buying Bitcoin, but they almost certainly are. It doesn't matter if you like it. It doesn't matter if you don't like it. They're probably going to do it. And we have to accept the fact that the trade-off of having global, fungible, permissionless money is that you're going to bring in all of the good guys and you're going to bring in the bad guys. And hopefully the system itself, the network itself, in a decentralized fashion is going to incentivize more and more people to forego being bad guys and become good guys and become a part of Team Humanity.
MicroStrategy adding to its Bitcoin hoard, purchasing 15,400 Bitcoin at about $95,000, $96,000 per Bitcoin for a total cost of $1.5 billion. The company's executive chairman tweeted, "We hodl more than 400,000 Bitcoin." Joining us now, Michael Saylor, MicroStrategy executive chairman. Your average, Michael, it's good to have you in studio again. Your average for those 400,000 is 58,000 per Bitcoin, so it's been moving higher as you keep buying at higher prices.
We bought it about 42 times since August of 2020 to today.
From August of and at this point, the strategy is to issue stock or convertible debt of MicroStrategy and use that to buy Bitcoin.
We're a Bitcoin treasury company, so we're securitizing Bitcoin. We're providing high-performance equity. We're also providing convertible bonds. We've provided other kinds of bonds in the past, but primarily our job is to bridge the traditional capital markets that want bonds or they want fixed income or they want equity or they want options. And we plug that into the crypto economy, and we use Bitcoin as the vehicle to do that.
What percentage of the public do you think understands Bitcoin at this point? Because I don't know if it helps to go into your strategy, what you just tweeted about. If people don't even understand Bitcoin, and I still see it everywhere, that it's air or that it's not like gold because you can't make jewelry out of it. Believe it or not, still people saying that because you can't touch it, that it can't be real and it can't represent money. So can we go into how you're arbitraging it to make a return?
Yeah, here's what you need to know.
Okay.
The S&P is about 15 ARR for the past 4 years, and the volatility of the S&P is 15.
Okay.
If you want to own a commodity like silver or soybeans or gold, they have very, very low performance, less than 15%, 5%, 0%. You don't really want to hold soybeans for 100 years. And sometimes they have volatility, but it doesn't last that long. Bitcoin is 60 volatility, 60 ARR, and it is a legal commodity, but it is an economic scarcity. It is the only commodity invented in the history of the human race that's absolutely capped. And so that means you can expect it to keep going up. If I can give you a commodity that outperforms the S&P index, if I can give you a commodity that's more volatile than the S&P index, you can put 100% of your liquid assets in that commodity per SEC rules. I can't do it with a security, by the way. So up until Bitcoin, people had to use gold or real estate as their commodity, or they have to use the US Treasury bill. Those are all underperforming the S&P, and they're less volatile. Bitcoin is the first thing you can use in your treasury that's more volatile, that outperforms the S&P. The result is, if I give you a security, Joe, that outperforms the S&P, how much of it do you want to buy? And if you're an ARB or an options trader, and I give you an option that is 4x the volatility of the S&P, or with MicroStrategy, we're 10x the volatility of the S&P, how much of it do you want to trade? So Bitcoin's unique in the history of the capital markets. It's the first scarcity commodity, outperforming the S&P, more volatile than the S&P, that you can put on your balance sheet.
Volatility is vitality, I think is what she was going to say next. But yeah, I think those are good points. I have to laugh that him talking about soybeans, surely some degenerate out there created soybean coin. Because some people maybe do want to own soybeans for 100 years. Let's put soybeans on the blockchain, man. It's the future, bro. Go all in soybean coin. No, I'm just kidding. Don't do that. Stick to Bitcoin. But really though, let's get to Michael's point here. What he said is true, but I want to back up a little bit and get back to Joe's question, the guy that asked him that question. It's a very common concern still people have. Like, Bitcoin's not real, so why would it go up? Well, people trend to value the thing that is the most difficult to reproduce, right? Just that is a universal law, not just of mathematics and economy, but like everything humans value. It is difficult to reproduce love, and people value love. It is difficult to reproduce children. It might be fun at the very beginning to reproduce, but of course, raising that child to 18 is something very difficult. Like, we care about our children because they're hard to make more of, right? Like we love them. We care about them. We want to see them succeed. We care about ribeye steaks more than we care about wheat, because it is more difficult to raise a cow and slaughter the cow than, sow and reap some wheat, right? It's like everything we do in our life, every minute of our time, is expressing something that's difficult to reproduce. I am making this video right now. It's difficult to reproduce this. Most people can't just start talking about Bitcoin and MicroStrategy for an hour straight, right? Like, there are many people that could do it better than me. I'm not saying I'm the best by any means, but there's 8.2 billion people that can't do this. And there's maybe a few thousand people that can do this better than me, right? And you happen to be watching me, which, thank you, by the way. You should like and subscribe. Those are wonderful stuff. But my point is that we always desire things that are difficult to reproduce. And Bitcoin is a number. Now, numbers are really easy to reproduce, right? I have a calculator right here. I'm going to open up my calculator app. See, look at how easy it is to, make numbers. I can just make new numbers all the time. There's nothing scarce about numbers. There's an infinite number of numbers, right? Like, literally, right? And so why is the Bitcoin number more scarce than any other number, right? What's the reason? The reason why is that it absorbs electricity. You have to spend electricity to create more of this specific number within this specific accounting system. You have to expend a certain amount of electricity to get a certain hash, a certain output, to create a new block, to release new Bitcoin. It is inherently cost prohibitive to produce more of that number, right? The Bitcoin miners do essentially what I just did, right? Basically, you just roll endless dice, creating random numbers until you get the exact precise number to then initiate more Bitcoin, right? To discover a new block and release more Bitcoin, issue more Bitcoin in the network, right? And so that's my point here, is that what Michael Saylor just described here is very true. Bitcoin is a commodity that outperforms the S&P. Bitcoin is this volatility, vitality, all that, right? But why? Why does it do that? It does that because Bitcoin as a numerical system is more difficult to reproduce than the stock market, than the S&P 500. It is difficult to reproduce stocks. It's more difficult to reproduce stocks than it is difficult to produce American dollars. Why? Because the people in charge of American dollars are heavily incentivized to produce more dollars, right? These are the politicians incentivized to print more money. And the people in charge of stocks have less of an incentive to increase the supply of those stocks, right? If the American government removed all regulations from stocks and people no longer trusted stocks or wouldn't put in their monetary premium in stocks, America wouldn't be able to harvest tax receipts from those stocks all the time, right? And so this is my point, is that we always trend towards a thing that's the most difficult to reproduce, even if it's just random numbers on a screen. There's nothing different about the numbers in your bank account versus the numbers in some video game that your kid plays. There's nothing different. It's all numbers, right? But the reason one set of numbers is more difficult to reproduce than a different set of numbers is because of the societal energy that goes into that. And likewise with Bitcoin, people naturally trust Bitcoin to retain its purchasing power in the future because it becomes common knowledge by people that own Bitcoin that there was a massive electrical cost with randomly producing Bitcoin out of thin air. No matter how much tech advancement, quantum computers, AI, or robotics, or whatever we develop in the future, right? So everything Michael Saylor just said is true, and hopefully this is a good baseline explanation of why that's true. Bitcoin is a commodity. Again, capital, capital, capital. Focus less on currency. Capital, capital, capital. Commodity that is right now a store of value asset because it takes a lot of energy to reproduce. It's not the easiest thing in the world to create. It's much easier to create, whatever, World of Warcraft tokens or, political currency unit in some smaller country than it is to create the US dollar. It's a lot more difficult to create US stocks than it is to create the US dollar. And it's infinitely more difficult to recreate Bitcoin than US stocks. And so therefore, Bitcoin is more volatile than stocks. It is more volatile than soybeans. You can grow more soybeans. You can deregulate the stocks. You can print more currency. And you can just keep clicking more random numbers on a calculator all day long. But it's very cost prohibitive to create more Bitcoin, which is precisely why it's more volatile than all these other assets. And it's precisely why it is actually lower risk.
Volatility at sometimes is not always a good thing. I mean, it's great when something's going higher. But don't think that there'll be a drop or a significant drop that comes along? Have we moved past that because of the regulatory changes that have taken place?
I think it'll remain volatile because it's a 24/7, 365 global asset. You can panic sell it on Saturday night. You can enthusiastically buy it on Sunday morning. That's a feature. That's not a bug.
Yeah, you've lived through some of the swings, but do you think we won't see the downturns like we've seen in the past just because of the changes we've seen?
I think it's going to surge through the roof, and then it's going to surge to 180 and crash to 140, and people will be freaking out about it again. But let me make this one analogy. Volatility is like fire, and some people run away from the fire, but Henry Ford put the fire into a carriage via an engine, created an entire industry, and he gave humanity wings.
Can we talk about, so I've been leading up to for me and for everybody to understand your tweet just from, I think, in the last hour. So what did you do last week with the Treasury operations? You were able to generate a Bitcoin yield of 2.55% or over almost 10,000 Bitcoin to shareholders using an arbitrage. Can you explain? Will I be able to understand this if you explain this?
We sold $1.5 billion worth of stock, backed by $500 million worth of Bitcoin. We bought back $1.5 billion of Bitcoin. We captured nearly $1 billion gain in the arbitrage. That we can do with equity day by day. When we do it with debt, we issue $3 billion of debt that's backed by $600 million of Bitcoin that comes due in 5 years. We pay 0% interest. We buy $3 billion of Bitcoin. We capture the $2.4 billion in the arbitrage gain up front. But then over the course of the 5 years, we double or we quadruple the investment because we're buying an asset which is appreciating faster than the S&P.
What you told me was that it's 55% premium over conversion, but a zero coupon. Is that the same?
That was a zero coupon 55. And you can do that because Bitcoin is high vol, and the companies that have Bitcoin on their balance sheet have even higher volatility. So Mara is a great example. 2 weeks ago, they did $1 billion convert, zero coupon, to buy Bitcoin. This week, they're back in the market doing another $1 billion convert, zero coupon, to buy Bitcoin. You can rinse and repeat that frequently.
Arbitrage. That's something that a lot of people are trying to wrap their heads around when it comes to MicroStrategy stock versus Bitcoin. When you're buying MicroStrategy stock, you're paying a premium against Bitcoin, and it's a pretty expensive premium. Okay, now I think that premium is going to trend up over time. However, it will collapse violently and strongly at times. And again, your focus should be on holding actual self-custody Bitcoin, not on a paper derivative, for a wide variety of reasons, not just for the reasons of gains, but the reasons of reducing risk. Bitcoin is lower risk than owning some security that is backed upon Bitcoin. You're accepting all the risks with Bitcoin, as small as they might be, and adding a bunch of new risks. Bitcoin is lower risk than MicroStrategy. However, let's talk about this arbitrage question. This is a very common question I get. Luke, how are they arbitraging Bitcoin? I don't understand. Okay, let me try to explain it. The people stuck in the fixed income world and the bond world can't buy Bitcoin. They can't buy, they can't buy the commodity, right? We talked about that, right? Regulations are constricting that. And so they're willing to bid up something they actually can buy to gain some portion of that volatility with Bitcoin. And so they're willing to pay a premium. And so they benefit because they're able to get exposure they weren't able to get before. And likewise, Michael is able to get a premium, or be able to arbitrage that premium and basically transfer and convert that premium from the bond market into Bitcoin. I've been saying for 5 years now, for literally years, both publicly online and privately, that bonds are a bubble. The bonds cannot continue. Like, avoid bonds. They are not low risk. They are super high risk in real terms. In nominal terms, they're the lowest risk investment in the world. But that's because they are the highest risk investment in the world when it comes to preserving your purchasing power in your real terms, especially if you're young. For goodness sakes, avoid the bonds. However, all of that premium is going to be converted into MicroStrategy, into Bitcoin, right? MicroStrategy is like the doorway enabling all this premium stuck in the football stadium to exit the stadium, right? MicroStrategy is securitizing Bitcoin and converting it to them, and Bitcoin holders are going to greatly benefit because all of that premium is getting sucked out of the bond market into Bitcoin, right? People complain about, oh, Michael Saylor is buying too much Bitcoin. The price is going up too much. We need Michael to get flushed out. Then we can start actually going up in price and being healthy. And we can start demonetizing the bond market and fiat currencies. It's like, no, this is how we're demonetizing the bonds. This is how it's happening. And in retrospect, it was obvious. You have to have Bitcoin meet people where they are. I say this all the time when you're trying to orange pill the people in your life. Meet people where they are. What is their pain point? What is their story? What is their concern? What is their interest with Bitcoin? Meet people where they are. And likewise, meet investors where they are. And Michael Saylor is doing exactly that. He looked at the investors available. He asked, what's the best way we can meet them where they are? And that's exactly what he's doing by offering these bonds. And the beautiful thing is that it works. It works because these investors in fixed income are willing to pay a premium for that Bitcoin. MicroStrategy itself directly benefits from being able to capture that Bitcoin that they're going to keep forever. And they can then give those shares off, right? All business is arbitrage, right? It's like, I am arbitraging my time to make this video because this video will get, whatever, 15 bucks in AdSense from YouTube, right? It's like, I'm arbitraging, right, to get a profit, right? I'm arbitraging the random neurons and thoughts in my brain, turning them into digital pixels that have flown through the internet to make it to your screen that you're watching with your eyeballs, right? Like, I have using the things at my disposal, the technology at my fingertips, to arbitrage this around me and basically convert premium to myself, to enrich myself, and also hopefully to benefit you. Like, that's all business, right? That's all profit. Profit is arbitrage, except arbitrage is a fancier, cuter way of saying it in this scenario because it sounds more financy and special, right? In the same way, yield just means income, basically, right? I know they don't technically do, but you know what I mean, right? So that's how the arbitrage is able to happen here with Bitcoin and MicroStrategy. Basically, Bitcoin holders are directly benefiting by bondholders willingly paying for a premium against that Bitcoin because there's so much premium already in the bond market. They're willing to cannibalize a little bit of that to get some of that Bitcoin exposure. And so Now, I think that is the conclusion of that clip. Let's go to the final clip here. If you have noticed, which you almost certainly have, every clip progressively, there's a higher Bitcoin price. Every clip progressively, they're still asking, when's the next dip? When's the next dip? Michael, of course, had a quick little joking prediction there of $180,000 of Bitcoin, then crashing down to $140,000 of Bitcoin, where everybody freaks out, right? So, just it's consistent human nature. Like I was saying earlier in the video, is that, we want to have that dopamine hit of when's the next dip. We ignore the fact that anytime this thing could just go up another 3%, another 5%, another 10%. So let's get into the last clips here, the last interview with the highest Bitcoin price to be shown in this video here.
Michael Saylor is here with us this morning, and I'd love for you, if you could, it's great to see you. Bitcoin's been a wild run, and boy, have you been right, but I'd love for you to respond to this report.
Yes, I should probably clarify the report here before going any further. There was a report that came out of a company that was massively shorting MicroStrategy stock. So for those of you that don't know, when a company or a fund shorts something, it means that they believe the price of that is going to go down dramatically, right? We saw this. You probably heard the movie The Great Short, where a few people shorted the housing market in 2006, 2007. They made a lot of money, right? It's the same thing here. So what's being asked of Michael Saylor here is, what do you feel about these companies shorting your company and basically saying that your stock price is going to collapse?
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week, we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share. But over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is, if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company.
Yeah, Michael getting cut off there because Michael's answers don't fit the runtime of traditional television. Michael's answers are much more fitting for a YouTuber than a television journalist. Yeah, Michael tends to give 45-minute answers, and the news wants 45-second answers. So anyway, yeah, what Michael said there is very similar to what I was saying earlier in this video. Basically, he's transferring and deferring volatility from fixed income people and giving that directly to shareholders. You give the bondholders what they need, which is fixed income and reduced volatility and reduced risk and some sort of debt or obligation of project, right where the principal protected note of some sort. And the other side of the spectrum, you need all that leverage, you need all that volatility, that 100 vol, like you described, for the people playing with the options, right? Both the upside and the downside, which again is to emphasize, MicroStrategy will have a massive crash someday. That's not really popular to say right now, but I think that's very, very likely because again and again and again, Michael is emphasizing what the company is selling is volatility on the upside and on the downside. And likewise, Bitcoin is also going to crash someday, right? But it's going up right now. I think it's going to go up a good while longer. And there's a potential that crashes much later than we think or much different than we think, right? But The point is that no matter what you're doing, if you're holding Bitcoin self-custody, and if you have some allocation to it, you don't even have to have all your net worth in it. You're probably going to be just fine, because that volatility is going to rapidly outpace and grow in purchasing power compared to the other assets in your portfolio in your life that are losing purchasing power. Because there are those things you want to have. I own a car, I own clothes, I own a phone, right? I own these things. All those things are trending to zero against Bitcoin. They're not volatile. They're static. They're dying. They're decaying. They're losing monetary premium every single day, every single minute that flows by, just like entropy and the universe itself as we all approach our inevitable demise and death, right? But my point is that Bitcoin, you don't have to have 100% exposure to Bitcoin for the volatility of Bitcoin to greatly benefit you and enrich you. And the irony in all this is that eventually Bitcoin will go to the point where it doesn't matter anymore. To the same way that the treasury, the Bitcoin treasury component of the MicroStrategy business model has all but made irrelevant the traditional software business model, it's the same thing for you. If you take a 5% or 10% exposure to Bitcoin, that Bitcoin is going to grow in purchasing power enough that you're going to have 90% purchasing power to Bitcoin, even if you never bought any more Bitcoin after that first initial buy, right? Like, that's the irony of Bitcoin. You either go all in Bitcoin now voluntarily, or you take a small allocation to Bitcoin, and then inevitably Bitcoin itself forces you into Bitcoin being basically your entire net worth, right? So, that gold or that real estate or those stocks or that cash you have sitting on the sidelines, or diversified, quote unquote, whatever, right? I mean, it's reasonable to have some of those things, right? It's reasonable to have a car. It's reasonable to eat food every day, right? It's like, you can't have every single breath you take be turning into Bitcoin, right? You need to live and enjoy your life, right? Just because something trends to zero against Bitcoin doesn't mean it's worthless. It just means it is not worthy of storing monetary premium. So anyway, I digress. The point here is that Bitcoin is volatile. Bitcoin is volatile because Bitcoin is an asset worth $100 million a coin that's currently trading for $100,000 a coin. And you don't get to go from $100 to $100,000 without some volatility. And likewise, you don't get to go from $100,000 to $100 million without some volatility. That's why Bitcoin's volatile. It's radically underpriced, and it's deserving of a massive slice of the monetary premium that is in all these other assets combined, multiplied by all the future wealth that we're going to build into the coming decades with better and better technology, and hopefully a better and better globe of progress.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making $500 million a day. I'm staring at my screen, and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing. And so if you don't like Bitcoin, you don't want any piece of it. But if you like Bitcoin, then this is a monster for you.
It's a monster. It's a good monster. It's a friendly monster. I'm going to conclude this video here talking about something that Michael said that I think was really important, was that the biggest risk is that loss of Bitcoin goes to zero. Okay. And I'm going to say this very genuinely here. There's a lot of you watching, if you're still watching this far in the video, there's a lot of you watching that are going to have that moment. The odds of the entire Bitcoin network collapsing to zero are extremely low. 1 in 10,000. Something really, really low, in my personal opinion. The only way to successfully kill Bitcoin is if you kill the entire internet and radio systems globally forever, never to return. That's the only way you can realistically kill it. I think a very low probability. However, we're not talking about the whole network. We're talking about you right now. The odds of your Bitcoin stack collapsing to zero are way higher than the network itself collapsing to zero. I have conversations all the time with people that have lost Bitcoin due to self-custody errors. I have talked to people all the time that have lost Bitcoin due to some scam or some hacker or somebody convincing them to say, all kinds of scenarios, even with people that have been in Bitcoin a while, even with people that have been in Bitcoin for 5 years, 8 years, 10 years. I myself obsess about Bitcoin. I'm in Bitcoin all day, every day. I don't even trust myself. That should tell you something. Okay. You need to obsess about your Bitcoin self-custody. You need to obsess about your single points of failure, because your number one risk is not the BTC going up or down. It's not what Donald Trump says about Bitcoin. It's not the short-term Bitcoin price volatility. It's not about this. That's all noise, okay? You can handle an 80% Bitcoin bear market. You can handle that. What you can't handle is losing 80% of your Bitcoin because you made some mistake. An 80% loss of the underlying is way more painful than an 80% price loss. You can handle a couple of year bear market. You can handle that because your only risk at that point is your income and your cash flow to have the ability to survive, right? You can wait it out, right? That is your only risk with that. You have to secure their underlying. This is really critical. I highly encourage you. Feel free to reach out to me. I'm happy to talk to you. Okay, I had multiple conversations today with people around this. I'm going to have more tomorrow. I'm going to have more the day after that. I'm going to do this for as long as I possibly can while I still have time. However, not everybody is going to be able to have that chance. Just there's too many of you and there's only one of me. I can't leverage myself out indefinitely, right? I've got 40 people, the Bitcoin advisor, that help me. Wonderful team. I think the best team in the world at doing this. The team since 2016 has had a 100% success rate, despite overseeing over $1 billion worth of Bitcoin custodies and transacted, right? Like, we have a really good team with really good experience, but we all know, and we talk about all the time, is that we're not going to be able to help everybody. We're only going to be able to help the people first through the door that take it the most seriously. And frankly, that's okay with me, because they're the ones most deserving of this. And this is my parting message with you. You probably have risks when it comes to Bitcoin. You probably have fears when it comes to Bitcoin, but your number one risk is the risk of losing their underlying. You do not want to have a lawsuit hit your mailbox next week of some silly, stupid, evil person trying to scam you out of 5% or 10% of your Bitcoin stack because they're throwing some piece of lawfare lawsuit at you, right? You don't want to have $1 million worth of Bitcoin on a seed phrase in your home where your wife and your children sleep. That's irresponsible. You wouldn't have $50,000 of unmarked cash bills in your car. So why on earth would you have 6, let alone 7 figures of Bitcoin, which is even better at transacting than unmarked bills? Why would you have that in your home? This is no longer just a question about self-custody. This is a question about your personal safety. You have to keep these questions in mind. How are you securing your Bitcoin against user error? That basically means you have to spend hundreds of hours, if not thousands of hours, continuously staying updated with how to custody your Bitcoin better than everyone else. It is not enough to be average, because the bad guys go after the average people. They don't go after the people that are secure above average. So this is my number one request. This is my number one encouragement for you to do. Obsess about your Bitcoin. Take it seriously, because like Michael Saylor himself described, your number one risk is that your Bitcoin goes to zero overnight immediately. And while that's not going to happen for the whole network, it could easily happen to you. I believe that for multiple people watching this very video, you are going to lose all of your Bitcoin within the next 10 years. Okay, maybe not a lot of you, maybe not, obviously not all of you, 90% of you will be fine, but a lot of you are going to lose all of it. And even more of you are going to lose a third of it. And probably very few of you are going to keep all of it. There's only 21 million Bitcoin, man. Like, they're not making any more. At some point in the future, at some indiscriminate point in the future that we can't quite tell yet, it will no longer be a question of who is increasing the Bitcoin stack the most. It will become a question of who is having their Bitcoin stack shrink the slowest. You have less in common with the near future than the past. You have to take this in radical consideration immediately. I know it's expensive. I know it takes a lot of hours. I know it's inconvenient. I know that I charge a good bit. Why? Because I don't have any failures with clients, right? That is my point. That is my encouragement. And if there's just a 5% chance, even let's say 1% chance that you're going to have a critical existential loss to your Bitcoin and you have $1 million worth of Bitcoin, this is a $10,000 problem that's staring you in the face. Maybe you only have $100,000 of Bitcoin, but you have a 5% chance of risk. That's a $5,000 problem staring you in your face. Spend the money, spend the time, fix this now. Because as the Bitcoin price goes up, this problem is not going away, man. It's only going to grow. Right now, maybe you have a 1% rate of risk on $1 million worth of Bitcoin. What happens when that Bitcoin becomes worth $3 million and you no longer have a 1% rate of risk, but you have a 3% rate of risk? Oh, now we're looking at a $90,000 problem. Okay. This problem you have with that small, tiny, tiny chance of your Bitcoin being stolen, being lost, right? That risk is never going to be smaller than what it is right now. And so that's my encouragement. Information to reach me is in the link in the description below. Text me, email me, book a call. There are free calls available. There are paid calls available. You can learn more about which is best for you, right? I'm desperately pleading you to do this because if you don't secure your Bitcoin properly, you're going to lose it. Like if you don't obsess on it, somebody who is obsessed will take your Bitcoin. So please take this stuff seriously. Feel free to reach out to me in the comments below. And the big message, the optimistic message to finish this video out is that you are so early to Bitcoin. You have more in common with Michael Saylor than the average person in the future is going to have. You are closer to a Bitcoin bank than you are to an average user of Bitcoin in the far future, right? You have a lot of Bitcoin. You're okay. You have less in common with the future in the past. The future is very bright. Your kids and your grandkids are going to be so grateful that you did the right thing and protected your Bitcoin and didn't squander it or spend it on stupid stuff or lose it for a stupid reason. Take protecting it seriously. Reach out to me in the comments below. Thank you for your time. And yeah, information in the description below. Happy holidays. Have a Merry Christmas if it's not been Christmas yet. And go out, enjoy life, and enjoy family. Thank you. Like and subscribe. Do all that wonderful stuff. Appreciate it.
Spend quality time with quality people in one of the most beautiful places in all of America. You can do this at Bitcoin Zion 2025, a Bitcoin-only networking retreat and experience. It's 3 days, Thursday, May 29th until Sunday, June 1st, 2025, immediately after the Bitcoin conference in Las Vegas. There'll be speakers there, everyday plebs, Bitcoin people you would recognize, and we're all going to be there enjoying time with each other, being outside, and getting time to relax and really connect with other people. All kinds of conferences in Bitcoin are wonderful, but this kind of event is very unique and specific because you get so much time with Bitcoin speakers and with other people in Bitcoin. You get to build actual friendships and relationships and experience memories. Hopefully you'll carry with you for the rest of your life. Lots of speakers have already been announced. More speakers and surprises are coming down the line. But whatever the case, the whole point of this event is not to rush with event after event, but to slow down and take time to not just get to know another person, but get to know them as a person themselves and as a friend, not just as someone on a big stage. We will be talking about Bitcoin. We will be relaxing. We will be vacationing, and we will see some of the most beautiful hikes in the entire country. We have a luxury stay with some of the best lodging in the country, ranked some of the best lodges in the world, and lots of quality food as well. Private chef and everything of the works. Bitcoin workshops, there will be tutorials, Bitcoin workshops for beginners, advanced corporate treasury strategy, Bitcoin self-custody, multi-sig, all that wonderful stuff. Your logistics are covered. You'll get 3 meals a day. There'll be private chefs and catering. The resort is covered. Your transportation from Las Vegas is covered. Everything is covered, and you will have unique activities. We have an orange Cybertruck coming, a hot tub, games, pools, movie nights, and lots of fun outdoor activities with your Bitcoin friends. Join us if you're a business person looking to expand your business. If you're an entrepreneur trying to get new ideas from others, you can join us for pleasure. Bring your wife, bring your kids, bring your family, bring your husband, bring people in your life, and you get to enjoy the beautiful outdoors with them. Or you can join for a mission. If you have a church or you have a nonprofit organization, bring your loved ones, bring your friends, and help them better understand Bitcoin. Tickets are limited because this event is obviously way less than 1% the size of Bitcoin Vegas, so tickets will go fast. Please reserve your spot now. You can do it at lukebtc.com, my website. If you join my Retire on Bitcoin community, you will get a significant discount on your ticket, as that is one of the many perks that they get in the Retire on Bitcoin community. Text the phone number on the screen, Bitcoin Zion 2025, along with your email, name, and guest count, and we will get you sorted out as quickly as possible, because ticket prices will be rising upwards and live as, of course, we approach capacity. There are going to be less and less spots available. So please reach out as soon as possible, get your spot. We would love to have you. We would love to get to know you. We would love to enjoy 3 days together immediately after one of the biggest events in all of Bitcoin. Reach out. I'll be there, and I'll be more than happy to get you set up so that you can come to this event as well. More than anything, get outside, spend time with people in Bitcoin that you care about, and build new friendships.